What's up, dude?
Yay.
What's up?
Many of you know or you've heard that Medicare will cost you more if you have a higher income, and this is true. There are two parts of Medicare, Part B and Part D, that are impacted by the Medicare Income-Related Monthly Adjustment Amount, also known as IRMAA. So let's talk about it. Every year, the Centers for Medicare and Medicaid Services, a branch of the Department of Health and Human Services, sets the monthly premium amounts for Part B. Usually these go up just a little bit each year. 2023 saw a slight decrease for the first time in about a decade. So to give you an idea, when Medicare started back in 1965, the Part B premium was $3 per person per month. The base Part B premium for 2023 is $164.90 per person per month. With Medicare, everything is an individual plan. So if you are married, you don't get to combine with your spouse for this number. Each of you will have your own separate premium. This is true of all of your plans while on Medicare, like Supplement or Advantage, drug plans, dental, vision, and others. All right, so the base number as of this recording is $164.90. Where does it go from there? Well, when calculating your Part B premium, the Social Security Administration will look at your modified adjusted gross income from 2 years prior. So it is 2023 right now. For 2023 Part B premiums, they would use my 2021 modified adjusted gross income amount from my 2021 tax return. Next year in 2024, there will be another 2-year look back, and they will use my 2022 tax return to determine my 2024 Part B premium amount. This is important because the number will change each year. You aren't locked into your income level 2 years before you retire. Your income amounts move with you. This will be even more important later in this video. Let's look at a chart real quick. The first two columns are modified adjusted gross income ranges. The first column is if you file taxes individually. The second column is if you file jointly with a spouse. Remember, these are your numbers from your tax return 2 years ago. The third column is your monthly Part B premium amount based on your income. So to clarify one more time, because we get asked this a lot, let's say that you are married and you filed together and your income 2 years ago was $400,000. Each of you will have $527.50 per month as your Part B premium. Well, wait a minute. What if one of you made all $400,000 and the other made $0 or any combination in that range? It doesn't matter. If you file jointly, you both have the $527.50 per month premium, meaning your combined household Part B premium amount is $1,055 per month. That is for Part B, and I have important situations that I want to discuss that will impact your retirement decisions here in a minute. But first, there's a similar bump in Part D premiums as well based on your income. Let's add another column here. This is the Part D surcharge. Remember, Part D is your prescription drug coverage. This surcharge over here gets added onto your Part D prescription drug plan monthly premium. These plans and their premiums vary dramatically. Some are less than $10 per month, others are over $100 per month. So whichever Part D plan you get, you would add this number here to your base premium. An example might help. Let's say that my wife and I have Part D drug plans, and our monthly premiums are the average for the country right now at $31.50 per person per month. And our combined modified adjusted gross income, filing taxes jointly, is that same $400,000 number from 2 years ago. Both my wife and I each need to add $70 per month to our premium number, bringing each of our monthly premiums to $101.50 per person per month, or $203 per month as a household in Part D premiums in this example. Together with Part B and Part D, we are paying $1,258 per month in premiums just to have the plans, all based on our income 2 years ago. So this usually prompts something like, hey, this isn't fair. I was earning the highest income of my life 2 years before I retired, and I don't earn near that much anymore because, well, I'm retired. Two important considerations. One, yes, this becomes problematic because many of you had your income drop significantly once you retired. Luckily, there is a way for you to appeal your IRMAA amount. You need to submit an SSA 44 form, and based on certain life-changing events, you can get your premium reduced to either a lower level or all the way back down to the base level, depending on your circumstances. Given the example we've been using, you'll notice that one of the boxes is work stoppage. It sounds a lot like retirement, so yes, you can appeal this amount. With this appeal, remember that it is a 2-year look back, so you will appeal your income 2 years before you retire. Then the next year, they will be looking at your income 1 year before you retired, which could still be high, and you would need to submit this appeal a second time. All right, the second thing to understand with this IRMAA conversation is how it impacts what you do financially during retirement. If you own real estate or business equity, or you want to pull out a bunch of money for a house remodel or to gift to a child, you need to be aware of these income levels. Let's say you're 68 years old, you've been on Medicare for 3 years, and you and your spouse want to buy an RV, so you take out $100,000 from your investments or you sell a property. Well, 2 years later, when they do a 2-year look back, you're going to show a high income year, and your Part B and your Part D premiums could shoot up for that entire year. And you may not remember the fact that 2 years ago, you made these financial decisions that contributed to this. So yeah, IRMAA is a big deal. It can potentially make life a little difficult for a year or two, depending on what you do. We help people with both Medicare and Social Security with a team of Medicare nerds, myself included, as well as a team of financial advisors. The financial advisors watch this carefully, and they help people understand how their Social Security income, investment income, and other incomes will all tie together with their tax burden and their Medicare premium burden. All right, be sure to subscribe to this channel if you haven't already so you don't miss out on those Social Security videos and other Medicare videos that we put out there. If this video was helpful, giving it a like does a lot for our channel and the whole YouTube algorithm, where they will show this video to other people who would find this helpful. I appreciate you making it this far, and I will see you in the next video.